Good afternoon, everybody. Welcome to this week's live stream. If you have been asleep for the last 4 months and you look at US markets, you think it's business as usual. S&P all-time highs, NASDAQ all-time highs. Is this the start of the next great American stock market bull market? And we're here for it, day 1 or 2. It's really interesting. I thought, the S&P, it's just opened, isn't it? So it has, it did take out the all-time highs from earlier in the year from Feb in the overnight market. Didn't quite do it yesterday during the normal session, but it's taken it out overnight. The NASDAQ took out its all-time highs a little bit earlier in the week. And here we are. Who'd have thought it? We've had change of government in the US, tariff, to and fro's, talks about the start of World War III, and the stock market loves it. So really interesting, I think, for the next few months and where it all goes from here. Of course, there are such things as false breaks, where a market breaks out like we're seeing at the moment, and there's no follow through, and the market just dumps. But I think it's a really interesting time after a pretty tumultuous time since February for us to be here at all-time highs. So more of that as we talk about this today. I'm David Jones. I normally do this every week on a Friday. We'll catch up with what's going on in markets, the major markets, indices, commodities, currencies, blah blah, gold, oil, all of that. If there's any markets you want looking at, if you put it in the chat, for those of you who are here live, for the chat, for the YouTube thingy. And that's it. So really interesting. I think it's been an all right week for me. I'll talk a bit more about my trades. I was long, I probably mentioned it last week. I was long platinum last week from down here. Came out overnight on that. I think that's interesting now for maybe later today or next week. So I'm not in that trade anymore. I bought the DAX, the German market, earlier this week down here. And of course that's been dragged higher by what we've seen in the US. So it's been an okay week overall for me. Interesting to see where it all goes. So that's it. Let's get into it. Let's just get some of the housekeeping out of the way. Then we can take a look at some of the markets. So a quick risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay, there we go. Now I've been a bit lazy today because I'm going away next week for a bit. So I'm in pre-holiday mood. I haven't looked at the major announcements for next week. So let's do it now. It's a busy week next week. And it's the 4th of July this time next week, which is an important date for the Americans. So I'm guessing US markets must be shut next Friday. I don't know. Let's take a look at what's coming out next week though. Monday, UK GDP. That could be a big one. Relatively big for the pound. The pound has pushed to its best level in a few years. We'll take a look at that with the dollar weakness. So that's out Monday morning. Not much else on Monday. On Tuesday, we've got EU inflation data is out. So that is, again, potentially a big one, I think, on Tuesday. Wednesday, nothing of real importance on Wednesday. And then Thursday's a bit nuts because I didn't realise this until I looked about 2 minutes ago. They've brought the payrolls, the non-farm payrolls would normally be next Friday. They've brought them forward today. So they're on Thursday. So on next Thursday, it's the US non-farm payrolls, so the unemployment numbers. I wonder, because normally, let me have a quick look. Normally, the stock market in the US shuts a bit earlier before major holidays. Is that the case? No, it's not. So it is. No, it's shut on the Friday, July the 4th. But I'm guessing it's a day as normal next Thursday. So that'll be a really interesting day, I think, with a major announcement coming out and then a day's worth of trading before the US has a long holiday, long weekend due to the Independence Day. So yeah, a lot going on next week. So for me, UK data on whenever it was, Monday, UK GDP, EU inflation on Tuesday, and then Thursday, non-farm payrolls and some ISM services stuff as well. So it's a bit crowded on Thursday, so that could be interesting. So that's next week. So blah, blah, blah. There we go. Okay. Let's take a look at the markets. We'll come back to the WhatsApp group a bit later. So I'm going to be away. I won't be around for the next 2 Fridays. I'm having a well-deserved holiday because I work so hard. But I do have a WhatsApp group. I'll continue to update the WhatsApp group every day. So the WhatsApp group, I do a daily update, markets I'm watching, trades I'm running, Q&A. And if you want to sign up and try it, it's the code YouTube. We did a seminar last night in the WhatsApp group, and it's a new one for me. I hadn't done it before. I'll talk about that a bit later. But if you want to stay informed, then sign up to the WhatsApp group. And I'll be back in 3 weeks for the next live stream. But, I mean, it's really interesting. Let's start off with these US markets. Here we are, you know. So the last all-time high for the S&P, I think the official high was about 61.45 at the end of Feb. Then, of course, we had all of that tariffs, and then of course various other bits and pieces going on. Market made a base or made a low on the 7th of April, down at 4,800. So it lost. What's that in the numbers? Let's do the numbers on that. 61.45 minus 4,800 divided by 61.45. So we saw a 22% fall in the S&P. I think the fall in the Nasdaq was it much bigger? What did the Nasdaq do? So the Nasdaq went from 22,240, let's call it 22,200, 22,200 minus about 16,4, 26% drop in the Nasdaq, high to low, and an equally impressive bounce back. I mean, look at the bounce in the Nasdaq. So 22,500 is where we are now, minus 16,400. It's getting on for 40%, isn't it? My quick A-level mental maths. Oh, I've done that maths a bit wrong. That's wrong. Hang on. Right, I'm going to do that right now. I am intrigued. 22,500 minus the 16,400 low did 6,100 divided by 16,400. 37% rally in the S&P in less than 3 months. May, June, July. Yeah, less than 3 months. So in the Nasdaq. So here we are. You know, so anybody who's ever bought an S&P or Nasdaq ETF at any point in history and has sat with it is in profit as of today. Okay, which is, I think, is always an interesting, if particularly not really useful fact. So here we are. You know, traditionally markets breaking out is a positive sign. You know, when we see, if we look at, let's look at, you know, what this market, the S&P, has done in recent years. That was the high after the COVID rally. So that was the pre-COVID high was there. Then of course COVID happened, and the market tanked. Then we had that really sharp bounce back during COVID. Takes out the old high, did chop around a bit, then got to move on. Then we had the weakness beginning of Jan 22. And then we had the Russian invasion of Ukraine, so we saw markets under pressure until October. Then we had the breakout again about 18 months ago now, Jan 24, through 4.8. The market rallied up to 6.1, so what's that, 1,300 points, 25% move following that break. Then we had, of course, all the stuff we've had in recent months, and here we are again breaking out, blah, blah. There we go, there's a potted history of the US indices over the last 5 years or so. So it is interesting. I'm not in a hurry to jump in and do anything, but I think it makes for an interesting week next week to see what happens with this break. Do we get the follow through or the usual? So for me, I would, you know, for now, I mean, my default position on the way up has been to be a buyer. You know, it's been a little bit frustrating at times, you know, from the first week of June to the last week of June, we didn't see much progress. Then we've seen it really accelerate again over, well, really this week, isn't it? It is this week, isn't it? So the S&P was 59.60. So we've seen the market put on 200 points this week to these all-time highs. And here we go. So if I was a buyer, what would I do? Well, what's yesterday's low? Yesterday's in-session low looks to be ahead of 6,100. So if I was a buyer today, that would be the closest I'd have my stop, the other side of 6,100. And it is, on the face of it, it's positive. Let's see. For fans of the old squiggly lines, let's have a look at the RSI on the dailies. There we go. There's a 10-day RSI on the S&P. I mean, it did go overbought on the way up. The market's pushed out again. We do have bearish divergence, which perhaps is one reason that some may have for being a little bit cautious, where the market has pushed higher, but the RSI hasn't. So that can be a bit of a concern that perhaps in the short term, the market could run out of steam. When did we last have anything that looked like that? Probably here. Here we go. And it didn't work then. There you go, back then. So it hits a high in 2023, December 23, goes higher in Jan 24, bearish divergence, market didn't care, market carried on going up. Let's see what happens. But, for me overall, this is a positive move. Even if it's sold off, if we start with the dailies, for me, 5,700 is big support. So even if the market dropped, 450 points from here, which is about, it's too late in the week for me to do the maths. It's about a 7% drop from here. For me, that recovery is still intact. So yeah. Thanks for that comment, Robert. So I'd still be a buyer because that rally is still very much intact as long as that 5,700 level holds. Okay, so this is a positive move. To see a market break out to all-time highs, given through what we've been through over the last few months, I think is pretty major. Well, I think what's also interesting, if we go back to earlier this year, we had European markets outperforming US markets, which, in my experience is quite rare to see. We had the likes of the DAX, for example, had a cracking start to this year from ended 2025 around about 19,800. The market rallied up to 23.4 by March. Again, that volatility when we saw US markets under pressure, the volatility there. We saw the likes of the DAX and the Spanish market bounce out to their best levels, bounce out to fresh all-time highs before the S&P and the Nasdaq did. So we have had for a chunk of this year European markets outpacing these US markets. Over the last couple of weeks, that has changed. So traditionally, I would expect the US markets to be leading the rest of the world. We had a slightly different situation in the first 6 months. I wonder, are we going to go back now, assuming we do see these US markets move higher, do we go back to a situation where the US markets are the preference for investors and we see European markets lag? I don't know, but I thought it was quite interesting that we have the Nasdaq and the S&P hitting fresh all-time highs, but the DAX, has been under pressure for much of June. Saying that, I am long the DAX. I bought the DAX earlier this week because I thought it had turned around that trend from early June. So I'm in the DAX trade there. Maybe, I'm hoping that gets dragged up by the strength of these US markets. If we take a look at the FTSE, again, the FTSE came so close to setting a fresh all-time high. So the all-time high from earlier in the year was around, I think the out of hours all-time high I'm showing here is 89.11. I think the actual all-time high in session is about 89.08. It came really close to setting a fresh all-time high in June, middle of June. I bought it on the dip. I got stopped out because the market has sold off since then. So again, with this particular European market, the FTSE does move historically quite different to other stock markets because of its makeup and because of its impact from the pound. I thought it was interesting that the FTSE's been under pressure. Let's see if these European markets get a bit of a lift if we see US markets continue to push higher. And the same for the French. The French index has done nothing really since the end of April. We've seen a bit of up, a bit of down, but still broadly sideways. So and the Spanish index had been a great performer. I did some trades on the Spanish index earlier in the year. A great trend in there, but that's another one that has faltered over the last month to 6 weeks, even though the US market has continued to push higher. So for me, it's good because all my longer term stuff tends to be US, S&P and NASDAQ ETFs. I have had a less aggressive approach on that in recent months. So for me, it is particularly interesting if these markets do get a move on and maybe we see the start of this new trend in US stocks. So that's that. So that for me is going to be the bigger focus for next week. Which brings me to gold. I mean, gold is down a couple of percent today. And I was wondering, considering this bullish move in US stocks and the sort of year that gold has had so far, is this, with no pun intended, going to take the shine off gold now? Gold, again, had a great run into this year, into April. So ended 2024 at 2,600, traded as high as 3,500. So we had, a 900-point move, almost a 40% move in gold by April of this year. And since then, it's been a bit sideways. Now, the big trend over time for gold, let's just tidy this up a bit and get rid of some of this stuff. Our big trend for gold has been up. We could go back to 2018. In this view, we have had higher highs, higher lows in the price of gold. So buying the dip from a more longer term point of view has been a profitable approach when it comes to the price of gold. Is that going to change if US markets going to move on again? I think it might, but with a market that at its best was up 40% for the year to date in April, clearly it's had a big move. So for me, there's still a trading opportunity in gold, even though it has taken quite the hit over the last couple of weeks. It's down, what's it down? About $180 over the last couple of weeks. So for me, it's an interesting one for next week. The big support for gold is down around 31.20, which is $140 below where we are now. If we looked at gold over the last couple of months or so, it is broadly sideways. We've got this broad sideways range for the price of gold. So for me, if I was a buyer, I want to be buying at the bottom of the range. At the moment, for me, it's not far off, sort of slap bang in the middle of the range. So I'd rather wait and do nothing. I think for me, there are more interesting markets like these US markets at the moment rather than gold. So let's see how that all pans out. Let's talk about silver actually. Then we'll take a look at the likes of platinum and palladium. Okay, so let's bring up silver because I must admit, this is not. I think I mentioned before. I'm not a fan of trading silver because it has these moments. We get these breakouts. And if we go back over time, this is the price of silver. If we pick up on that August 2020 highs in silver, around about $30 an ounce in silver, it does nothing for 4 years. Then we get the breakout in May 24, so just over a year ago. It goes up for a few days, sells off, and it all gets a bit scrappy. We had the breakout again, more recently over the last, in June, best levels since 2012, 2013, something like that. And again, not much follow through. So silver for me, if you compared silver to gold's been a much better trending market. And for me, it's always about the trends. And silver tends to be a bit scrappier. Saying that, I'd still be a buyer. If I had to do a trade on silver, I'd still be a buyer because the trend is up. The only question, and as usual, it's a big one, is where am I going to put my stop? That was the latest breakout a week last Tuesday, which has failed. We're again with silver, we're in a bit of a sideways range. We've got the lows coming in around about 35.20, the highs above 37. It's really of not much interest to me. But if I was a buyer, I'd probably want to be a buyer with a stop the other side of $35. Okay, well beyond the extremes of this range. So yeah, it's still not the most interesting market for me. But a couple of markets that have been interesting. It was the trade I was in from last week. I probably talked about it on the live stream last week, and I came out of it overnight. Platinum, and we'll have a look at palladium as well. I mean, this again is a market. Let's just take this off just so we can see the size of this move. This is the daily chart. It had been a pretty boring market, I'd say, for the last few years. We've been sort of again banging around in a wide sideways range. So for me, when a market is in a sideways range for that, not much interest. You know, I want to try and be trading bigger trends. It has trended over the years, but it's been, you know, fairly uneventful going back to 2017. You know, we've had the odd flurry of excitement and then not very much at all. But we have had, you know, there we go. You can see that the size of the move. My data on this chart only goes back to 2017. So we're at least at I guess at least a 9-year high on the price of platinum. And it had been a good trend. And it is still a good trend. You know, it's been a vicious move today. I mean, what's it turned around today? It's turned around $110 today. So it's a big move. It's an 8% move we've seen today. So I think that's an interesting market going into next week. You know, I bought it last week in here somewhere, going with that trend. For me, I'd make the argument that trend is still up. So even though we've had a bit of a vicious move, for me, that trend in platinum is still up. So it's maybe one for next week. You know, at the time of recording this on Friday afternoon, the market's still under pressure. The market is still sliding. So I would want to have my stop at least the other side of 1240. And those were the lows from, when is that? That's this week. That was the opening, the first hour on Sunday night trade in Asian trade. So the low for this week so far is around 1240. So if I was a buyer, I put my stop the other side of 1240. If we were looking at the RSI is heading oversold. The last time it was oversold was on that Sunday night, first hour. Then before that, we had the oversold signal last Thursday as well. So the oversolds haven't done too bad. And then back here a couple of weeks ago, that was on the 13th of June. So the oversold signals haven't done too bad. Let's see. So for me, it is probably not a trade for today, but it could well be one for next week, just seeing if this trend is going to continue in platinum. If we take a look at palladium, I haven't traded this, but again, let's have a look at the bigger picture. Actually, it looks less dramatic than platinum. Let's just tidy some of this stuff up. So palladium has had some really good moves over the years. You know, I've mentioned a few times, I was trading it back here in 2019, and it was a great trend. It would just keep breaking out and just keep motoring higher. It went a bit nuts over COVID. Then we had a fairly significant decline, and over the last 18 months, it's been sideways. That's our range on palladium. You know, it's a big range. It's gone from the mid 800s to the mid 1200s. So we've had a 50% range in the price of palladium over the last 18 months or so. But overall, it's still in that big range. So for me, platinum's the better trade because it's moved out to multi-year highs. But you know, there's what I was saying about platinum on the hourly chart at least stands for palladium as well, that the trend is up. So that for me is an interesting market to watch next week. Okay, that's it. So gold, silver, bit boring for me. Platinum, I think, is a bit more interesting to see whether that trend holds next week. Let's take a look at oil and natural gas. Oil. It's been a big month for oil, you know, which is perhaps not a surprise given what's been going on geopolitically. You know, the last day of May, oil traded as low as almost $60, and the high for the month has been above 78. You know, so we've had a 30% range in oil over the last month. It has been a crazy month for the price of oil. It gapped open on Sunday. This is the Sunday open. The first hour of Sunday trading has been the high for the week in oil. And then on Monday, it sold off about $12 from that high. So a massive sell-off. Oh, that's a little alert to tell me to move my stop on the DAX because that's just broken out. Okay, fair enough. So yeah, I mean, I'd be quite tempted to be a buyer of oil here and take the view, all right, we might not see 78 again anytime soon, but perhaps we'll see it push back into the 70s. Is perhaps one idea. If we have a look at the dailies, you could always argue, you know, because again with trading, I think the thing that we forget, or that maybe we assume when we first start trading, is that a market is always a definite buy or sell. And I think the more time we spend trading, if we do actually manage to get past the first year of trading, we realize that there's always an argument usually to be a buyer or a seller. And I think that's the case for oil. I would make the case at the moment, perhaps that move on Monday has been overdone. Perhaps we'll see it crawl its way back up to the mid 70s. But if you look at the bigger picture, hang on, I've drawn that in the wrong place. Let me get rid of that. The big trend since, when's that? Is that 2023? You could argue that big trend, apart from the gap opening on Sunday, that big trend is still down. We've got lower highs and lower lows in the price of oil. So there's an argument to say, well, perhaps that high we saw earlier this week is the latest retracement in that downtrend, and back we go to the mid 50s again. I don't know. In the short term, I'd sort of quite like to be a buyer, but absolutely longer term, oil has been drifting. It's actually been drifting since back here, or sliding since March 22, since the Russian invasion of Ukraine. So we're 3 years into that, and that hasn't really changed. We get big rallies along the way, like this month, a 30% bounce higher in the price of oil. But ultimately, over the last 3 years, these have proved to be unsustainable. So there we are. But for me, I wonder, it's an interesting risk-reward trade, I think, for me to be a buyer of oil. And if I pick up on it, let me just think about where my stop would be. I mean, for me, an obvious place to have my stop is probably the other side of $64.50, which were the lows before the market went really nuts when all the Israel-Iran stuff started over recent weeks. So I think that's maybe an interesting market for next week as well. Natural gas, if we have a look at that, natural gas is a popular market, I think, with many retail investors. Has become more popular over the years because of the moves we had in 2021 through to the summer of 22. Natural gas historically had traded in a range from sort of $5 down to $1.50 for many years, and then we saw the market go mad in that period there. So a lot of people started trading natural gas then because the volatility suddenly jumped up. It's been a different 18 months or so. I would say that overall the trend for natural gas over the last 18 months has been up. This is the daily chart we're looking at. The lows from early 24 were around $1.50. It traded as high as $5 almost in March of this year. It is a volatile market, even though, if we look at it like that, it doesn't look that volatile now. The swings we're getting, if we flip this over to an hourly, just in the last 24 hours, it's gone from below 330 to almost 360. So we've seen a 10% swing just in the last 24 hours. It's like oil moving $6. Even though it doesn't look like that much, it's a big swing in percentage terms. So I think, again, that's perhaps an interesting market for next week. We have seen these lows from a week last Wednesday hold around 325. If I was a buyer, I'm going to have stops below there. I must admit, it tends to be a bit too much of a volatile market for me to trade, but I know it's a popular one. Interesting to see if these old lows hold. Okay, so that's that. Let's take a look at the dollar, and then we'll have a look at some currency pairs, and we'll have a look at the dollar index and Bitcoin as well. Dollar index, I think for me, this has been a difficult market. I've not traded it much this year. It's been a good market over the years for me because this is the dollar index, the dollar basket, the dollar against a basket of 9 different currencies. There have been good trends over the years. A good trend from the lows in 2021. It went from about 90 to 115. So what's that? It's a 2,500 point move. All a bit sideways since then, and it started breaking down this year on the talk of the tariff stuff from the new US government, and blah blah blah. I think one of the difficult things I've found with the dollar index in recent months is the fact we get the break, like this break here in April, through what had been a big level, the lows from July 2023. So it was an 18-month plus low, big level, and then there's no real follow through. It gets a bit choppy, pushes a bit lower from one day, Then we get quite a sizable rally, comes back down, holds, pokes below it again in June. We get a rally, and we've had the breakout again in recent days. Okay, so it sort of breaks, stutters, goes back, and I think it's quite, if you were trading the breakout, it's perhaps been quite a choppy market to trade. I would suggest in recent weeks, so it hasn't really been one for me. But here we are. It's trading now at its lowest since, where have we got to go back to on the dollar index? Feb 22. So 3-year plus lows on the dollar index. I suppose, if you thought, well, this time round, this break is the break where we're going to see the dollar start a prolonged move lower, then for me, a logical place for the stop is perhaps somewhere above 100. So the market's at 97.20. So that would be a 300-point stop, which has only really been the range for the week so far. So that's one. But I think I found it a bit frustrating to watch. Haven't traded it because it's been a little bit too stuttery. But with this dollar weakness, of course, it's had an impact on other markets. If you look at pound against the dollar, this is trading at its best levels since Jan 22. So 3-year highs, pound against the dollar. And again, with the dollar, stuttering in recent months, we see the pound break out, all go a bit sideways, back off, and then rally again. So for me, going with the trend, I'd have to be a buyer of the pound against the dollar. As usual, the only question is, well, where does my stop go? If I was trading off the dailies, I'd have it under the low for this week, which is the other side, just the other side of 134. If we were looking on the hourlies, I don't even know. Where would your stop go? Maybe the other side of 136, something like that. So yeah, I mean, it's one to watch. I think next week, if we do start to get more of a pronounced move for the US dollar, and so far it's been a little bit stop-start, I would suggest in recent weeks. So it hasn't really been one for me. Same with euro US dollar, so a bit more of a sustained move in the euro against the dollar. So the euro's trading at its best levels in 3.5 years, since September 2021. New highs, new 3.5-year highs today. So a bit more relative strength in the euro versus the dollar rather than the pound against the dollar. And again, if I was looking at an aggressive trade on euro US dollar, or an aggressive stop, I should say, these old highs on the hourly charts through all of June, mid-June, through to the fourth week of June, were in around 116. So if I was a buyer now at 117.26, perhaps a stop somewhere the other side of 116 would be an idea. But let's see. I think it all depends, obviously, what happens with this US dollar, and do we have a bit more momentum. And finally, Bitcoin. Bit of a damp squib, I think, Bitcoin. So lots of excitement in other markets this week. Not so much for the price of Bitcoin. The long-term trend for Bitcoin, if we go back to here, September 23. So go back 18 months. The long-term trend is up. We saw all-time highs earlier this year, just at 112 in May. It's been a bit sideways since then. I thought it was interesting this week. Was it this week or over the weekend that the market slipped below 100k, but got bought up pretty quickly? I would take that as a sign of clearly positiveness, that there is an appetite to be a buyer on that brief dip below 100k. But if you look at the last 5 weeks, 6 weeks, it's all a bit sideways, Bitcoin. So, but from a bigger picture point of view, I'd be a buyer of the dip. If I really wanted to buy it now, 107, where would my stop go? I'd chuck it the other side of those lows from Sunday. So the other side of 98 is what I would do, I think, with Bitcoin. So, but yeah, not much interest to me at the moment because it is all a bit sideways. So that's it. So I think there's lots to watch. I'm glad in a way we've had this break in these US indices because that makes things a lot more interesting for me from a trading point of view and an investing point of view. A strong start so far today. Again, pushing out to fresh highs, fresh all-time highs today. So some real strength in these US markets. So it makes for an interesting week next week, even though it's a short week. And we've got the payrolls on Thursday. The DAX, German DAX, is getting a bit of a move on as well, which is good for my DAX trade. My target in this sort of market would be, well, are we going to get, if these US markets are making fresh all-time highs, are we going to see the likes of the DAX get back to its previous all-time high from the end of May, which is another 400 points or so, 500 points from where we are now. So I think that's an interesting one. Platinum, because it has been a great trend. Are we going to get the bounce again next week? Gold, not so interesting because it is all a bit sideways, but it is under pressure. Where do we see the buyers come back in? And oil, because it has got hit so hard on Monday. Has that been overdone? And do we see it try and crawl its way back into the 70s? So lots to watch for the rest of today and into next week. But for me, US stock market's definitely the most interesting. Right, we'll take a look at the stuff you want to look at. First of all, a quick plug for the WhatsApp group. So I update it every day. I talk about the markets I'm watching, the trades I'm running, where my stop is. So the trades I do, I talk about them. And, but typically for me, I do not jump in and out of trades. That platinum trade was running for 8 days from last Wednesday. The DAX trade, I put it on Wednesday, what is today, Friday. It's moved to a trading stop today. So I'm not a jump in and out 30 times a day person, but I talk about my trades, where the stop is and why I'm doing the trade, all of that. I do regular webinars for people in the WhatsApp group. We did the latest one last night, which was on a different topic to one we've talked about before. And it's all about identifying when a trade you've just put on, perhaps thinking about exiting that trade earlier than you would, because it doesn't look like being a winning trade. So I've sort of been trying to experiment with some thoughts on that. But you'll get access to all these webinars. I'll send you the links. The one we did in May covered my approach to day trading indices, which I think will come back into focus again now because we have these breakouts in these US markets. So if you'd like to join the WhatsApp group, go to the website, davidjonestrading.co.uk, use the code YouTube, and you get 20% off the first month. To find out who I trade with, go to bit.ly/DavidTrade. Any questions, drop me an email, dj@davidjonestrading.co.uk. I don't have all the answers, but I started trading 1995, 30 years ago, made loads of mistakes for years, so I do have an opinion, even though I don't have the answer to everything. Right, so any questions, I'm happy to answer them. Let's take a look at the stuff that you want looking at. Hold on a second. Gold, we covered gold, didn't we? So it's a bit drifty, under pressure. So yeah, not much interest for me on gold. Interesting next week if it continues to fall. Do we see buyers come back in? But I think we do need to be aware, or I'm going to be aware anyway. Gold had a great run into April, up a bucket load for the year. It had been a perfect storm for gold. We had political uncertainty, new government in the US, economic uncertainty, tariffs, geopolitical uncertainty with all the unrest we've seen. So it was a perfect storm for gold, and it doesn't stay a perfect storm all the time. So if equities become more attractive to people again, all the newspaper headlines tomorrow will be full of US stock market all-time highs, blah 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 blah. Do people then get attracted back into equities and turn their back on the more defensive things like gold? I don't know, but an interesting next 6 months, I think, for the price of gold. Right, Nick says, can we have a look at Capital One Financial? I think this is one I've been in before. US stock. I must have, because I got a load of lines drawn on it, so I've definitely been in it before. This is another one that's breaking out, isn't it? I would guess there's going to be a load of US stocks that look like this at the moment. So we had all-time highs. I'm guessing that's all-time highs. So all-time highs in Feb, which again will be a pattern we'll see in a lot of US stocks, and a lot of stocks will stop. Then, of course, the market carnage kicks off, and off it goes, down it goes. So where did it go from? 210 down to 143. So it dropped $65, so 30% drop in Capital One Financial. And here we are, just about nudging out to fresh all-time highs. So I'd have to be a buyer, No surprise there, because the market's moving to all-time highs. I might want to be a bit patient, and it's only day one, day two of the move to all-time highs. Let's see where it is next week. As usual, the most important thing for me is where does my stop go? Based off the dailies, the closest I'd have my stop at the moment are the lows before this latest move higher. So at least the other side of 192, that low from June, maybe even a bit lower. So it's one of those. I'd probably be happier to wait for it to chop around a bit. But yeah, I mean, that is definitely showing strength, isn't it? So I'd want to be a buyer. Nvidia, once again, the biggest stock in the world. As of this week, Nvidia, or as of yesterday when I checked, all-time highs. It's going to the moon. So yeah, I mean, again, clearly, Nvidia's a really interesting one, isn't it? Because last year, 2024? The so-called Magnificent Seven stocks, I can't remember what they were, Nvidia, Microsoft, Apple, and Google, and was it Netflix and Tesla? I don't know, whatever. But was such a big part of the gains we were seeing in US indices. And this is Nvidia from end of 23, $50 a share, end of December 2023, and $150 a share in Jan of this year. So it tripled in the space of a year, and of course got hit like everything else got hit. Big old drop, 40% drop into those lows, and here we are. So again, for me, the market's at all-time highs. Who am I to argue with the trend? So I want to be a buyer. The only question is, and again, it's a big question, where would my stop go? The closest I'd have it would be 129, the other side of 129. And I think it's important, I think it's quite major that US stock markets have managed to break out to fresh all-time highs, considering what we've been through the last few months. Yeah. But just because we're at all-time highs today, and Nvidia is at all-time highs today, if you don't buy them today, you're not necessarily missing out. Yeah. There's nothing wrong with being a bit cautious. If we let's walk back through some of the Nvidia stuff. Nvidia had a major breakout in May of 2023. Yeah. But if you didn't buy on that day in May 2023, there was still plenty of opportunity to get in on the trend. Yeah. So I think, again, for me, it's important to go with the trend. It's important for me to recognize that breakouts usually are positive, but it doesn't necessarily mean I have to buy that day. Yeah. There may be a better entry point with a more logical stop and better risk reward if I'm a bit patient. So I think it is interesting. It's breaking out, absolutely showing strength. If I had to do anything today, I'd be a buyer. But waiting for a few days isn't going to make that much difference for me. But yeah, absolutely positive. Can orange juice squeeze any lower? Let's have a look. Because it had been making a base, hadn't it? I mean, it's another really interesting market this year, orange juice. Another one with an absolutely storming trend. If we go back, where did we go back to? October 21. So how many years ago? 3.5 years ago. Orange juice was trading around 125. And we had that trend where it eventually peaked as high as 550 in December last year. And I absolutely would have been a buyer of that dip that started in December last year. But the dip never stopped dipping. Sold off like an absolute maniac. So the price of orange juice pretty much halved from December into March. And then dropped a bit more into more than halved into April. Yeah. So what's the trade? I would say I'd be a buyer. There we go. That's what I would do. I'd buy it. No. So we had the price of orange juice. Let's call it 200. It hit 200 in April of this year. Where the rally to 320, a massive rally. It's a 60% move into the end of April. Loads of volatility since then. So my bet would be, is 200 a short-term base for orange juice? And I would say, based on what it's done over the last couple of months, yes, it is. But of course, no one's got a crystal ball. So all we can do is, for me, is go with the probabilities. So far, at least 200 has held. If I'm a buyer at 231 with a stop at 180, I got 50 points risk. If the market gets only back to where it was in April, there's 90 points upside in that trade. So I'd be a buyer of orange juice down here, but I would bail out if it broke much below that 200 level. It's interesting though, isn't it? I mean, that is a vicious move. I mean, talk about, the trend is your friend, apart from the bend at the end. I mean, it's quite the move in orange juice. Dollar Canada, Canadian dollar. From memory, that's all a bit boring, but maybe it's not. Let's have a look. What would you do? I don't know. I mean, you could. Absolutely. You'd say the trend for the last 3 years has been up. So the trend for the last few years has been one of dollar strength, Canadian dollar weakness. Yeah. So in whenever that was, in Feb this year, when presumably the president was mulling about making Canada another state of the US, we saw the thing hit 148. We're back at 136 now. I suppose I'd be a buyer, wouldn't I? I suppose. This is another one where you can absolutely make the argument to be a buyer or a seller. So the argument for being a buyer is, right, we're going with the long-term trend. And the long-term trend has been up for 3.5 years. On the way up, 134 was a bit of a floor. The market's at 136.60 now. So I want to be a buyer. And I'm going to have to stop the other side of 134. That's one idea, okay? But if you look at the trend over the last few months, then it's been down, isn't it? So in that time frame, you could absolutely argue being a seller in that one, couldn't you? So I think it depends on your time frame. So bigger picture, I'd be a buyer of the dollar if it weakened much below here. I've drawn that not very well. It should look something like that. But on the hourly time frame, the trend is down, isn't there? So for me, if I think, well, it might go up and it might go down, then I'd normally go and look at something else. But interesting to see. I think if we could just come back to it in a month and see what things look like on the daily time frame. Apple had not been doing very well in recent months because, clearly tariffs, may well have taken their toll there. It's interesting, isn't it? You got the Nasdaq at all-time highs, and Apple has done nothing for 2 months now. So for me, I'd say it's done nothing for 2 months. There's no reason for me to do anything. Absolutely, bigger picture, as I'm sure we all know, the trend on Apple is up. So I'd want to be a buyer of the dip. But since that low that all markets made in April, we had the bounce back. We've seen other markets, other shares carry on higher. Apple, not so much. So for me, it's just boring. It's a boring stock at the moment, which is not. It doesn't feel very often you'd say that about Apple, that it's a boring share, but it is. So for me, I'd be a seller. I'd be a seller of strength in anything. But it almost looks like it's been delisted the way it's trading at the moment. It's doing nothing at all. The OMX 30. What's that? Is that the Dutch? Is it the Dutch? The Swedish. All right, Swedish. The OMX 30. That's interesting, isn't it? See, another European market. So the Swedish index. Another European market that was doing really well into March, still setting fresh all-time highs, even though US markets had turned. Sells off, bounces back, and the bounce back has stalled. So I would look at a market like that and think, well, it's not doing anything. I'll go and look at the S&P or the Nasdaq or the DAX. So, what would you do? I suppose if I was doing anything, I'd almost be tempted to short it, given the fact it's been drifting since May. So I'd be tempted to go short with maybe a stop above the early June highs, around about 25.30. So interesting, but not interesting at the same time because it's not done much, has it? Sarabi Gold and Paladin Energy. Okay, hold on a second. Sarabi Gold, so London Stock Exchange stock. Nice trend. That is a great trend, isn't it? I mean, longer term picture is not as pretty, is it? Going back, anybody who was a buyer in 2011 and has stuck with it is, yeah, pretty not happy about that. But I mean, a great trend. What's going on? I'm guessing some sort of gold miner or something, isn't it? But yeah, so I'd be a buyer. I'd have to be a buyer because the trend is up. As usual, the only question is where would my stop go? You know, because even as an investor, I'd still have a stop, and I probably would want to try and wait to buy a dip. You know, we've had these breakouts, Robert, haven't we, this year? Like where it goes, like in April, breaks out, no follow through, broke out again, middle of June, no follow through. If I was a buyer today, I'd want to have my stop at least 120, these lows from March. The problem is it's 50p away from where it's trading now, which is a 30% stop loss, isn't it? So absolutely, the trend is up. I'd rather buy a dip than try and buy it here. And the risk is, of course, as usual, if I wait to buy a dip, I miss out on the market moving higher. What was the other one? Paladin or Palladium? Paladin Energy. So what's that? Australian market. My gut reaction is to be a seller. Yeah, so this is quoted in Aussie dollars, isn't it? It is the Australian market, isn't it? Yeah. Is it the Aussie market? Yeah, I'm sure it is. Yes, it is closed. Yeah, my gut reaction would be to be a seller because the trend is down. The trend has been down since May 24. So we've had a year of this stock just sliding. There have been absolutely some big rallies along the way. September last year, 8 Aussie dollars to 13. So what's that, a 50% move? Only for the price to crap out again. I mean, it's doubled off those lows since April. So again, big move off the lows. But the big trend for me, I would still be thinking, even though it's had a little nudge through the trend line, it's down. So for me, my gut reaction is look to sell a rally. But I mean, the flip side, if somebody thought, because there's always two sides to every market, you know, if somebody thought this is the start of a recovery, then I'd be a buyer at 8 with a stop the other side of 5. So I think, yeah, I'm not convinced yet that downtrend is over. I could see why somebody might want to be a buyer. I'd be a bit more patient. Interesting to see how it all pans out over the next month. Can we have a look at AAL? Yes, we can. I should put a disclaimer in here. I have got shares in AAL in my pension. It is the worst performing share I've got in my pension, Anglo-American. And I've had them in there for, I think, must be about a year and a bit. And they're down, I think they're down about 6%. And I've had dividends along the way. They recently spun off another company, haven't they? If you had shares in AAL, they spun off this company, Valterra Platinum. So I've got some shares in this company by default. I'm still in them. I bought them back here about a year ago or so because the trend was up. So this is the Anglo-American trend. The trend was up. Oh, you mean American Airlines, not Anglo-American? All right, well, let's talk about Anglo-American now we're on it. So UK commodity stock, interesting to watch. I've got them. I'm looking for the bounce to see if the trend holds. If it breaks below the lows for the year so far, I'll be out of it. I'll sell it at a loss. But that's those. And American Airlines, which is also AAL. Take a look at that. It's just boring, isn't it? I mean, you know, look at that. I mean, that is, imagine you dumped your life savings into American Airlines on the COVID lows and what stock markets have done since then, and American's still trading where it was 5 years ago. So, I mean, if I had to do anything, I'd probably be a buyer. You know, we've seen this $8 level on American has been the floor, hasn't it, since COVID, since May 2020. So for 5 years, $8 has propped up the price of American Airlines. So if I had to do anything, I'd be a buyer. with the stop below 8. But it's just a bit uninspiring, isn't it? I mean, it has some great runs, you know, like this run from last summer, from 9 to 19, marches it all the way up, and then marches it all the way back down again. You know, so it's a big old move. But yeah, it's not one for me because there's no trends. But yeah, interesting to see if that $8 low holds again for American Airlines. Let's see what happens. And that's it. And is there any more? Have I missed any more? I think that's it. Oh, hang on a second. My YouTube chat screen, let me put something in there, has frozen. Oh no, it hasn't. There we go, it's there. Right, so that's it, I think. If we're done, if we're all done, it's a really interesting time. You know, after the last 4 months of significant market volatility, you know, to be back here and see US stock markets at all-time highs. You know, there would not been, I think, a lot of people expecting that when we were in the eye of the storm in early April. But let's see, there is such a thing as a false break, you know, so we could see these markets still drop back from here. I think it's interesting to see if we get the follow through. Let's see what next week brings. So US markets are interesting to me. Platinum for the reasons discussed, you know, because of the trends. And we have had some strength in the last hour in platinum. Let's see how that works out. The price of oil, because of the big hit it took on Monday of this week, do we see that try and claw its way up? Otherwise, we're done. So like I say, I am back on 3 weeks time. I'll be back in 3 weeks. The WhatsApp group, for those of you who are in the WhatsApp group, will still be updated as normal. That will carry on. If you'd like to try the WhatsApp group, you'll get access to yesterday's webinar, which I thought was really interesting. It was a new one for me. And one from last month, which is this one. If you go to the website and use the code YouTube, you can sign up with that and get 20% off the first month. Otherwise, we're done. If you have any questions, drop me an email, dj@David Jones Trading. I think all the details are in the description to the video, so have a look at that. Otherwise, good luck with your trading, interesting times, and let's see where we are the middle of July when I'm back. But thanks for coming along, and see you again soon.